Priscilla Barrera with the Investing News Network, and here with me today is Adrian Day of Adrian Day Asset Management. Thank you so much for joining us
Well,
today.
thank you for having me, Priscilla.
All right, so my first question for you today is, last year we saw a rebound in the resource sector as a whole. Do you expect that to continue in 2018?
I do. I have a bit of caution in the near term with some of the base metals because I think they ran a little bit too far, too fast. But overall, I think the trend is definitely upwards, yeah.
That's good. And speaking specifically about gold, we saw gold prices gain more than 13% in 2017. Will that continue this year?
I'm definitely bullish on gold. It's interesting you mentioned the 13% because most mainstream investors didn't even notice it. In any normal year, 13% would be considered very good. No, I think gold has definitely turned the corner, and I definitely expect, a much stronger gold market this year. How much higher is difficult to say. I think a lot depends, obviously, on the dollar, but the US dollar looks as though it's turning down, but a lot also depends on the broad stock markets. Because if the stock markets continue to be strong, people feel less of a need to invest in gold. But I sense we'll probably see some kind of break in the stock market this year.
And what about gold stocks?
Well, gold stocks, as you know, have lagged gold, not just in the last 12 months, but in the last, 5-6 years. So the gold stocks have lagged. I think I always say to people, when you're new to the sector, buy gold before you buy gold stocks. Gold is a kind of hedge. But in terms of what's the better buy right now, I think the gold stocks are by far a better buy right now. As I say, number one, they've lagged. If you look at gold stocks versus the broad market, gold stocks versus gold, the valuations of gold stocks, on all these indicators, gold stocks are very, very cheap right now.
Right, and you explained before that gold stocks have underperformed the gold price in recent years.
Yeah.
Are you saying that will continue in 2018?
No, I think at some point we're going to see the reverse. But in order to see the reverse, I think we need a much stronger gold price. So gold might move up to 1,400, 1,500, and then I think we'll start to see people get attracted to the gold stocks.
Right, and what is the biggest challenge that the mining sector is facing right now that is maybe affecting investments in gold?
Well, the biggest challenge, which is a long-term challenge, is finding enough ounces to replace the ounces we're producing. And I'm sure other guests have talked about this, because right now, the number of discoveries and the amount of ounces being discovered is really in like a 20-year downtrend. I mean, it goes up and down, of course, but it's a 20-year downtrend. And for the last several years, we have not found the ounces to replace the ounces that we're mining. So that means that the ounces that we do have become much more valuable. So that's one of the reasons that I much prefer the exploration companies, which are looking for gold deposits, as opposed to the big miners that have to replace those ounces they're mining. I think that's the biggest challenge.
Right, but in that environment, we're still positive about gold stocks. It's still a good time to invest in gold stocks.
Well, I think so. And I would differentiate between 4 types of gold stocks. First of all, you have the royalties, and the royalty companies, even though they're overvalued or they're well priced, shall we say, I think they're a great buy, and a great buy is a foundation of a portfolio. Whether you're talking Franco-Nevada, which is the blue chip, or a Cisco Gold, which I think is probably the cheapest and the best buy right now of royalties. Then you've got, and the thing about the gold royalty companies, of course, is that they do participate in the upside, but they don't have the downside to the extent that miners do. The big miners are the most problematic area of all, for the reasons I just mentioned. Their costs are going up. It's difficult to find new ounces. They have to go out and acquire ounces. They have to overpay for ounces. Ounces are expensive. So that's the most difficult sector. But right now, that sector is very, very cheap. Whether you look at it on, as I say, gold stocks versus gold stocks versus the rest of the market, price to book value, price to cash flow, they're just very, very cheap. And typically, when the gold stocks start to move, the big mining companies move first. So, if you buy some of these stocks at the valuations where they are now and gold stocks move, you're going to get a good move. The irony is that I see the big mining companies as trading stocks, and I see some of the exploration companies as investments. And that's the sort of irony. And then, of course, you have the junior up-and-coming producers, which are likely or potentially going to be taken over. And then you have exploration companies.
Right. And in your opinion, what is the one biggest mistake resource investors should try to avoid making?
Oh, there's so many. I think one big mistake people make is not always recognizing what they own. And so, let me explain. People will often say, oh, you know, I sell when I have a 50% move. Well, okay, that's okay. But does it really make sense to be indiscriminate in your rules? Shouldn't you actually look at what you own, and maybe this company should be sold entirely, but this company you should buy more of, even though the stock's gone up? I think the selling is the most difficult part. Some people never sell. Some people sell automatically, as I say, like a 50% move. I think the most important thing in this sector is to really differentiate, really discriminate between the good companies and the bad companies. I'm not going to name names, but you know, there's 3,000 gold mining stocks listed in Vancouver and Toronto, and probably only 200 or 300 of those are really good companies. You really need to focus on the best quality companies. And to me, best quality means good management has proven itself, and it means companies with good balance sheets. Those are the two most important criteria to me.
Right, and this year, aside from gold, are you interested in any other commodities?
I'm very interested in copper, but I think copper has moved up a little bit too far, so I'd wait for a pullback in copper. But, you know, when you look ahead 4 or 5 years, we're going to have a big shortfall in copper production, and that's baked in the cake. You can say it's baked in the cake because with copper, you have such a long lead time that you can look ahead to 2022, 2023, and you can say with almost 100% certainty that there will not be a copper producer in 2023 that we don't already know about. So people who do the analysis of future production already have those numbers baked into their models, and we just have a shortfall of copper in the years ahead, and that's without any increase in production from, you know, increase in demand from a China recovery or from electric cars or anything else. Without any increase in consumer demand, we still have a shortfall in production. So I like copper, but I think I would wait for a bit of a pullback in copper. Same goes for most of the base metals. I'd like to see a pullback yet. So gold and silver are my two favorites at the moment.
Right, and finally, would you be able to share with the audience what are your favorite stocks or companies that you like right now?
Oh, yeah. Well, you know, that's a huge question because it really depends on what kind of investor it is. I've already said Franco-Nevada would be my, you know, number one pick. That's a blue chip. You buy it, you put it away. That's my number one pick. Cisco, I think, of the big royalty companies, is the cheapest of the big royalty companies. Among the smaller royalty companies, there's one called Metalla, MTA, which has grown. It's only been out 16 months, and it's grown, or 18 months, and it has grown significantly over that time. It has 4 producing royalties and streams, doing very, very well. So I think that's one to buy and give it a few years. And among the exploration ones, I like Midland a lot. Midland MD on Toronto. That's a joint, you know, that's a prospect generator. They've got about 10 active joint ventures. They'll see drilling on 6 properties or 7 properties this coming year. That's a lot of, you know, that's a very active program. And they've got over $13 million in cash. Riverside I like. That's a smaller prospect generator. Very disciplined people working in Mexico. Very disciplined, you know, they've got an alliance and they've got about 4 different joint venture projects.
Thank you so much for joining us
Well,
today.
thank you.
Right. Once again, I'm Priscilla Barrera with the Investing News Network.